Hey guys, Ted here once again with your favorite, favorite smart money podcast called Bodies and Wicks, um, where we discuss how smart money impacts the crypto markets. Generally, smart money is, it was taught in the forex and equities indices world. But I'm applying it to the crypto market, and it hasn't been working out, and that's why I'm bringing it to the crypto market. If you haven't been catching my videos lately, I've been discussing the what I call the barometers of crypto, which is Bitcoin, Ethereum, and Monero, and why I think those three are the barometers. Bitcoin, of course, being the first, the biggest, the one that everybody watches, the one that the market mostly follows. Ethereum, the first to introduce smart contracts. However, there's plenty of competition against Ethereum right now. But still a lot of new coins are being introduced as ERC20 tokens, which still follow the Ethereum protocol. And Monero is the first stealth coin, meaning that it is the first coin that can't, well, technically cannot be traced or has the ability to not be traced. Of course, they still can find ways to trace it, but a lot of people believe in this coin as one of the first to do what it does. And I talk a lot about Monero because to me it's my favorite. For one, it's the best to trade, and that's pretty much it. I think Monero is kind of the future of where crypto is going, and that's why I'm giving an update on it. So that's what today's episode is about. It is about the update on Monero that what I gave yesterday, um, and pretty much where it is. So I'm not even gonna do the intro. I guess I could do the cover page though. Why not? Hey, let's do the cover page really quick. Yeah, that's right. It went for the volume and balance. That's what it said. So yesterday, if you heard me talk, first of all, I should say if this is something that you like, all right. So smart money is disregarding everything you've ever been taught in the retail world, right? So the retail world will tell you to if you see double highs, right? If you see double highs, then once it gets to that third high, it tells you to sell, right? Um, or if you draw a trend line and the price gets back to that trend line to trade off that trend line. Or if you see a bear or bull flag, it's an indication of which direction that the price is going. Or you can draw a harmonic, if you got a deep crab or shark or whatever pattern it is, then it'll give you an indication of which direction it's going. Um, all that is thrown out the window when it comes to smart money. Price does not know what shape it's making. It does not know if it's a bear, bull flag. It does not know if it's a triangle. It does not care about triangles. What it cares about is uh, two things, right? And those two things are imbalances and liquidity. Now, a trend line can be an indication of liquidity. So instead of it actually bouncing off the trend line, it'll go through the trend line because so many people are trying to buy off the trend line that it knows that. And so instead, the people with the means and the ability to control these charts will sell to go through the trend line and take all the people's money who are buying. Get my drift? Or if you see a double bottom and people are trying to buy that double bottom, it'll go through the double bottom to take everybody's money who was trying to buy that double bottom, right? So this in the people that sell everything also hedge against their bet by shorting it, so they make money while they're selling, if that makes sense. So hope all that helps kind of understand where smart money comes from. This is how the bankers play the game, especially in forex when it comes to the U.S. dollar versus the euro or something like that. They know what the dollar is going to do, so they hedge their bets against it. If they think it's going to fall, then they sell the dollar. They hedge their bets against it, and then they short it. Why? Because it's their commodity and they have to protect it. Same thing goes with crypto, right? This is somebody's commodity and they have to protect it. So if they don't, and by protecting their commodity, they're also protecting their wallet, right? So yesterday, again, should say, as I'm going along with this, I keep forgetting where I'm going. If this is the kind of thing that you do enjoy, excuse me for looking over this way. This is where my software is for. I have 2 monitors right now instead of 3, so this is where my software. So for what I'm looking at, for looking at myself anyway, I'm looking over here for my software instead of at the mic where I should, or not the mic. The camcorder where I should be looking at. Subscribe. Just subscribe. Subscribe to this if you want to hear more about this kind of stuff. Believe me, it is going to help you because I was right in my prediction with Monero, and I'll show you in just a second. The least you can do is smash that like button. That is the very least you can do. It would help me out tremendously. And then also, if you have been following and you think what I'm doing is good work and you think other people need to hear this, share it. Share it with those people that need to see this, okay? Because if they need help. I know I needed help in the beginning because when I followed the whole traditional way of trading, I lost $1,000 in my first year of trading. Right? In my second year, I took a private mentorship with in Inner Circle Trader, and he definitely helped me out. If it wasn't for that private mentorship, I would not be in the position I am today, making money, even in times like these where prices are falling. Because I've been shorting the market because I think I had a feeling where I knew it was going. So that being said, do everything that you can with, like I said, with this video. Let's go on, head over to the charts, which I don't think is up. I think I forgot to put it up, which I did, which is not a problem. Give me 1 second here, and I will bring up this chart. There we go. All right, so this is Monero right here. And yesterday, like I said, there was a redeliver rebalance, which means that there was a wick longer than I think it was on the daily. Let me go to the daily really quick. There was a wick longer than the actual, yeah, here it is. There was a wick longer than the candle itself. So here is here is one of the candles. This is the daily candle, June 24th. June 25th, the wick extends below this actual June 25th, so 24th. So that tells me that there was a redeliver, what we call a redeliver rebalance. What that means is basically ignore the wick. Ignore the wick. What does that mean? Well, if you get rid of the wick, then you have what's called a fair value gap. Fair value gap is the difference between the height of one candle and the low of another candle in a 3-candle succession, right? So basically, since there's no wicks coming down from either side touching, which is what we would call a rebalance, then that leaves an imbalance, and that's what price looks for. So considering there's a redeliver rebalance, which means price would be looking to come down and fill this gap, right? So, and it did. It came down and filled this gap. this gap that I am going to pull on right here, where it says redeliver rebalance, that's the gap that it was looking to fill, because here's the high. The high was on June 22nd, this red candle. And the thing is that on this June 22nd candle, there is no wick on the top. Whenever you do not see a wick on either the top or the bottom, or a very small one like you do see down here, that tells you that smart money is in the room. Why does that tell you that smart money is in the room? Because as soon as the day turns over, or as soon as the 4 hour turns over, the hour turns over, and you see that there is no wick, that means that smart money automatically, boom, they dropped or implanted a ton of money into that chart or that asset. So whenever it flipped over to the 22nd, boom, they dropped. They sold a lot. They sold as much as they could to get the chart moving down, and also hedged against their bet by shorting it, right? So that getting out of that way, we know that that was also a bullish order block, as I said yesterday. And I said it would possibly come back down and get into where this little, where you see it's highlighted right now. I don't know if you can see that. This little highlighted area, that is a volume imbalance. I believe that is in the 4 hour chart, if I'm not mistaken. Yes, it is in the 4 hour chart. So you can see right here that there is no bodies touching. It's only wicks. So that is basically another imbalance. So price is going to try to come down. Oh, look, it actually filled that imbalance. Not once, but twice, almost a third time. Fourth time, it came all the way down to the 4 hour fair value gap. That's exactly what I was looking for. So here's a 4 hour fair value gap. So remember the daily fair value gap that I was talking about? Here's the 4 hour one. So here's the wick from the previous. So this is on June 22nd. There's a wick here. Comes up to about halfway through this bullish candle, and then comes up, comes back down, and then you have another candle just above it, pushes up, and comes all the way back up to here around $119, right? But down here, there is no wicks coming down and touching on either side, which would give it a balance. So there is no balance here, right? So whenever there is no balance, price does look to come down, and it may not look to fill the imbalance. It may just look to actually just touch the imbalance. If it touches the imbalance and just runs off, that's what we call an institutional order flow entry drill, an IOFED. You usually see that on my charts sometimes. So for one, you have a redeliver. I know this is a lot to digest, but you have a redeliver rebalance, right? So it comes down, takes over that. You have a 1 hour breaker and a 4 hour breaker. And in between both of those 1 hour and 4 hour breakers, you also have a 4 hour fair value gap. So both of these, so a 1 hour breaker would act as one support. So with the 4 hour breaker, it would act as support. The 1 hour breaker is here, right? And I think that's the 1 hour breaker, if I'm not mistaken. And this right here is the 4 hour breaker. So you have 4 hour breaker overlapping with the 1 hour breaker. And then in between the two, you have the 4 hour fair value gap. So the price comes down and is in all three, which makes complete sense. All right. So the 1 hour breaker being support, 4 hour breaker being support. 4 hour breaker would be the full green candle here that you see right here. Why is it a breaker? Because it follows a low. I don't know where the high went. There it is, high, and then lower low scenario. So the last high candle in that succession, which would be this green candle, would be your 4 hour breaker. Again, that would act as your support. And there's also a 1 hour breaker that is within that 4-hour candle, which is right here. See this huge 1-hour candle that goes up? I know I got it pulled way over here, but it should be right here. That is your 1-hour breaker right there. I left out the wick because it basically is pretty much right on par with the 4-hour fair value gap. However, in all technical analysis, you should actually have it extended to the wick. More than likely, it stays within the body, though. But if you really want to get technical, we can extend it to the wick. All right. So it comes down. It's within the 1 hour for fair value gap. It's within the 1 hour breaker. It's within the 4-hour breaker, right? So that low, high, low, or low scenario is right here again. That's where that 1 hour breaker is. And then also here is that 1 hour the 4-hour fair value gap. Now, within that 4-hour fair value gap, you also get a 1 hour fair value gap. So that would be from here to here. And if you didn't notice, there are 2 equal lows that come down and touch. They do not jump into either of these fair value gaps. What does this candle do? It jumps down into it. So it does break that 1 hour fair value gap. It breaks the 4-hour fair value gap by just coming in and touching it and leaving. Now, to me, this is the low point. That is the lowest that XMR is going to go. All right. And that's what I said yesterday. I said yesterday, this is, you can even see, look, this was my drawing from yesterday. I said it could come all the way back into this 4-hour fair value gap. It could fill it. Now, granted, it still can fill it. Okay. However, I don't believe that's going to be the possibility given how far this has actually already gone up. Right. However, there is a possibility that it could come up. I don't think it's going to, because it looks like the previous hour before, it looks like this candle right here, it looks like it tried to do its best to get above, but it didn't. It got stopped. Instead, the price went, okay, there's still something I'm searching for. What is it? I'm searching for an imbalance. So it reached down for the imbalance. It got it, right? And now I think it's going to be going up. I mean, you can see it now. Now, again, there is a possibility. And see, this is where I was yesterday, right? Last night filming this. Now I think it's going to be the same thing, right? Move it there. Could come up. There are equal highs up here that it could be looking for. Right here is a 4-hour imbalance. And look, we do have a volume imbalance here in the 1 hour. Volume imbalance being there's wicks, or there's bodies, but no wicks touching, right? That right there is the volume imbalance. That's where I would watch price to be looking to go toward right there. And that's around $125, $125.50, so somewhere around there, $125.50 pretty much. That is where I would be looking for price to go to right now. If not, the lowest it could possibly get would be about what is this? 115. 115 would be your lowest. It's at 117.83 right now, and that should be it. All right, and then maybe I put that it could possibly, fill this imbalance here. And yeah, that's a possibility. It could fill this imbalance, but ultimately it's going to come up here and try to get to this 125 marker. So it could try to fill this imbalance, and it could take a day or two, maybe even half a day, and then jump up to this 125, whatever. Or what it could do is it could run up and run into this imbalance right here and then close probably just above it and then fall back down and then try to fill this imbalance afterwards. All right. Either way, we're looking for 125. I think that is the mark that we're looking for. Okay. That's all I got for you today. I'm going to try to keep more videos like this short and simple, nice and sweet. And hopefully next one we can jump off of Monero, hopefully get into Ethereum or Bitcoin. But this is where we are with Monero. I just want to thank you all for watching. Share if you can. And we shall see you all next time. If it'll actually go to the next part.